Hello and welcome to Business Wrap. I'm Arjun Chaudhary with the latest news and updates. In our top story, European Union leaders are meeting in Brussels this evening to discuss the fate of the euro. On the summit's eve, German Chancellor Angela Merkel held 2 hours of talks with the French President François Hollande in Paris. The two remain at odds on how to move forward, with Germany opposed to pooling debt, while France saying that Eurozone needs further integration.
Europe is all set to take concrete steps to tackle its debt crisis at the EU summit in Brussels on Thursday. The summit will focus on the fate of the euro. On the summit's eve, German Chancellor Angela Merkel had long talks with the French President François Hollande in Paris. Both leaders are yet to find a mutually agreed model on how to move forward, with Germany opposing to pool debt and France insisting the eurozone on the need for further integration and sticking to the euro. German Chancellor Merkel expressed her apprehension for any immediate solution to the crisis.
The situation is serious, and we have the obligation of building a strong and stable Europe for tomorrow.
Die Zukunft Europas zu bauen mit einer starken und einer stabilen Währung, dem Euro.
Significant progress has been made as far as the Pact for Growth is concerned. I hope we shall be able to adopt it tomorrow.
But other European leaders are determined to take steps to ensure the continued strength of their single currency.
We are conscious of the measures that we have to take for financial stability. And we want, both of us, to deepen economic and monetary, and soon political union, to arrive at a point of integration and solidarity.
It is expected that leaders at the EU summit will consider plans to set up a banking union in order to strengthen the banking system of entire Europe. This banking union would be similar to the European Union, which will centralize all the banks of Europe. Europe's leaders would also focus on various strategies to give a boost to growth and to generate more employment. The summit would also focus on tackling Europe's government debt problems, which is a matter of concern. Greece's government debt now equals 165% of GDP. In Italy, it's 120% of GDP. In Ireland, it is 108%. Economists say anything above 90% saps an economy's health.
Germany obviously is having serious pressure put upon it by all its European counterparts. People realise that Germany have obviously benefited substantially from the single currency over the years, and now it is time for them to at least provide some sort of backstop.
The 17 countries that use the euro could issue jointly guaranteed euro bonds, sharing responsibility for the weakest countries' debts. Amidst the crisis situation, all eyes are now set on the EU summit, where some sigh of relief for eurozone is expected. Business Desk, DT News.
The country's largest lender, SBI, has cut interest rate on loans to exporters by 0.5% within days of the RBI increasing the export refinancing limits of banks. The move is seen as a sop to exporters. Export credit is linked to the bank's base rate and varies from 2.5% to 6% above that, depending on various factors including credit rating of the exporter. SBI base rate is 10%, while leaving the key interest rates and cash reserve requirements of banks unchanged at its mid-quarter review last week. RBI had enhanced liquidity to exporters by increasing the refinancing limits of the outstanding rupee export credit for banks. This export credit refinance was increased to 50% from 15%. And now we're joined by Sidhant from the newsroom, with whom we'll be discussing about the Eurozone crisis. Sidhant, it appears that 5 out of 17 Eurozone countries require bailout, Cyprus being the latest asking for that bailout. And the central solution being seen is that Germany adopts the common bond so that they're able to take on the weaknesses in the Eurozone.
Well, as the summit begins, many key factors will be taken into account. The summit is billed as the summit which can save the euro, but we have heard these rhetorics, these things that this summit will save the euro, this summit will save the euro. This is the 20th euro summit taking place in past 2 years since the euro crisis began, and well, nothing has happened. The market this time around are just expecting kind of a fizz. The basic divide is between the two growth engines of the Eurozone economy, that is France and Germany. There have been key disputes, in a sense I would term it as, between the German Chancellor Angela Merkel and the French President François Hollande. First among is growth versus the austerity debate which is going on. Mrs. Merkel says that austerity is the way forward, while Mr. Hollande says let's go for growth. We saw that in the
Sidhant, are we likely to see Germany adopting a common debt market so that they are able to take on the debts of the weaker economies as well?
Well, this is the second major dispute, which is the adoption of the Eurobonds. Eurobonds are basically mutualizing the debts of entire Eurozone. But Mrs. Merkel says that it's like pitting the stronger economies, that is the northern economies of Germany and others, with the weaker economies, the peripheral economies, Spain, Italy, Portugal, with them. And Ms. Merkel says, no, we can't do this. She is asking, let's go for basic structural reforms, that is fiscal union, political union, give us a sovereignty. Only then the German taxpayers will go for a bailout of the other countries. And as you said, Cyprus has become the 5th country. Out of 17 Eurozone countries, 5 countries have asked for a bailout. Portugal, Greece, Spain, now Cyprus. So
Sidhant,
it's a kind of bad news.
Right. Sidhant, you're talking about bailouts and austerity measures. What kind of opposition are we likely to see in this summit as well to those austerity measures?
Well, of course, austerity measures have created a big upheaval in the whole of Eurozone, especially among those countries which have asked for bailout, that is Greece and Spain, and presumably in Cyprus too. Austerity measures calls for basic cutting of jobs, layoffs, which actually nobody likes, and that is why there's a big kind of opposition against all these austerity measures. But Mrs. Angela Merkel says that we can't go forward without austerity measures, and we have seen because of austerity measures, unemployment rate have kind of zoomed. Spain has the highest unemployment rate of 25%. That is 1 in 4 people in Spain is unemployed. Even Greece is facing a high unemployment rate of 23%. Today the German unemployment rate came and it was also 8%. Now we are also seeing Germany, which is the growth engine, it contributes 27% of the economic output of the whole of Eurozone, is also facing a kind of slowdown. Right now we face problems of the peripheral Eurozone economies, which contributed very less to the Eurozone economy in a whole, because look at Greece. Greece only contributed 3% of the Eurozone economy. Cyprus contributed 0.2% of the economy. Now if Germany is also facing, the main driving force of growth in Eurozone is Germany, and it is now facing all the political pressures as well as economic pressures. It is slowing down. The whole of Eurozone will eventually fall in trouble if Germany slows down.
Thank you, Sidhant, for giving us a detailed response on the Eurozone crisis and see if the summit is able to find a resolution to the problem. Well, we'll take a short break. Now we'll come back with more news on Business Wrap.